In my prior video in this series, I talked about some ETF options available for people that are interested in getting exposure to crypto generally. In this video, you'll learn the difference between the two most popular ETF options for Bitcoin at the moment: the ProScale Bitcoin Strategies ETF, ticker BITO, and GBTC, the Grayscale Bitcoin Futures Trust. Stay tuned and buckle up. I'm Corey, and on this channel, I help you decode technology and innovation to grow your wealth on the journey to financial independence. In this video, you will learn the pros and cons of the GBTC, the Grayscale Bitcoin Trust, as compared to the ProShares Bitcoin Strategy ETF, BITO. Next, we'll look at why I think GBTC wins out for long-term value-oriented investors who are looking for exposure to Bitcoin as an asset class. To kick things off, let's talk about the ProShares Bitcoin Strategy ETF. So the day has finally arrived. US citizens have their first Bitcoin ETF product. While this is a great marketing ploy, most people would expect to be buying an ETF to buy and hold Bitcoin, and this is actually not the case. Additionally, folks who've been in this space for a long time know that the Grayscale Bitcoin Trust has actually been around for a number of years already. So, what's the hype around the ProShares Bitcoin Strategy ETF? Specifically, this ETF, ticker BITO, is a futures-based Bitcoin ETF. So let's break down what is a futures-based ETF. And this is going to apply generally to all futures contract-based ETFs. Futures contracts are derivative instruments. This means that they derive their value from some other underlying asset. In this case, the Bitcoin Strategy ETF from ProShares derives its value from the futures contracts, which are based on the future price of Bitcoin, which is all, again, regulated on the Chicago Mercantile Exchange. What this also means is that futures contracts expire at the end of each month in this case. That means that the BITO ETF at the end of every month is required to roll the futures contract, which means purchase the next month's contract. The issue with this potentially is that where the future month's contract is more expensive than the current contract the ETF holds, then it's said to be in contango. And this means, again, that the future month costs more than the current month. It's also possible that the ETF could be in backwardation, which means the current month's contract held by the ETF is actually more expensive than the next month's. This whole concept leads to the issue of rolling that this ETF will have to do while it exists. And that means that every single month, at the end of the month, the ETF will have to roll that futures contract forward. In my prior video, I discussed the issue of expenses as it relates to ETFs in the cryptocurrency and Bitcoin-based arena as compared to a standard Vanguard Total Stock Market Index ETF, which is passively managed, doesn't have these sorts of roll type expenses. If you want to learn more about that topic, I'll put a link down in the description so you can watch that video. Next, we have the Grayscale Bitcoin Trust. This is also called GBTC. And this was actually the first product available in the US market that would allow an investor to get direct exposure to the Bitcoin price. This trust is actually fairly straightforward, and it does actually hold Bitcoin. However, there are a few distinctions that we'll go over and how this is different from the futures-based ETF product. GBTC is a trust created by Grayscale, which is a pioneer in using the trust structure to allow US investors to get access to digital assets. All Grayscale products follow the same life cycle process to meet historical US regulatory requirements and restrictions. Let's go over that life cycle quickly. Step 1. There's a private placement. This means that if you're an accredited investor by US rules, which means you have over $1.1 million, not including the value of your house, and you could invest in a private placement. This is similar to how private investors would invest in the latest tech startup. These rules exclude everyday people from getting in on the ground floor, and this is actually why people really like the cryptocurrency markets. There's historically in the cryptocurrency markets no gatekeeper dictating a person's ability to get involved early and reap the same upside as an early Google investor or Facebook investor or Amazon investor. So next, after the private placement and 1 year has passed, investors in the trust, GBTC, are able to sell their shares to third parties. This is where Grayscale goes and gets regulatory permission to get a quoted share price that you see on any brokerage account and you see on the stock exchange. And then the original investors in that private placement are actually able to sell their shares through the stock market. GBTC does not actually sell BTC. The trust buys and holds Bitcoin. And when you buy GBTC, for example, you aren't buying newly created shares like in an ETF. You're actually just buying the shares that were previously issued to other parties who participated in that private placement. Next, once regulatory approval is granted, the trust is able to list over the counter. This is OTC. This means that anyone can buy the shares via their brokerage account. Finally, you've got the trust becoming a reporting company, which just means that it meets certain regulatory requirements for audit and reporting. So now, from your perspective, you can just go into your brokerage app or website and you can just hit the buy button. Under the hood, all this trust structure stuff that we've discussed here, you don't actually have to pay attention to it. However, there's one case where it does become relevant when you compare, let's say, GBTC and BITO. The trust structure is a closed-end fund structure. And what this means is that there's the actual price per share that you see on the investment exchange, and then there's the value of the assets. This is the net asset value. So this refers to how many Bitcoin that GBTC actually holds and what they're worth versus the actual price per share of GBTC. One of the critiques of this type of a structure, which is a trust-based structure, is that there's gonna be a spread, a difference between price you pay for shares and the actual underlying value. Why is that? That is because you're not able to create and destroy shares of GBTC in the same way you would for any other traditional ETF, like the Vanguard Total Stock Market ETF. When someone buys, new shares are issued. When someone sells, the assets underlying are sold and those shares are then destroyed. That way, there is a very small difference between the underlying value of the asset and the actual price of the shares. Because the trust structure of GBTC doesn't allow you to actually create those new shares, you end up with potentially a discount or a premium. Now that can be to your benefit. Let's use an illustration to show the difference between the actual price per share of GBTC and the actual market price. This is going to show you visually why the discount to the net asset value can actually be to your benefit. As you can see here, GBTC is actually trading at about a 15% discount to the value of the actual Bitcoin that it holds. This is where investors, I think, that are long-term oriented and value oriented could take a really close look at this product and basically buy it on a discount. Again, everyone's facts and circumstances are different, and you'll have to do your own research to make sure that this is something that fits into your own time horizon and risk profile. One of the attractive natures of GBTC is that it holds about 3.4% of all the actual Bitcoin in circulation, which is roughly 648,000 Bitcoin. And so investors who really don't want a futures contract-based product, they want to know that the shares that they hold have an actual value per Bitcoin that can be calculated, tend to like this GBTC product. Coupled with the fact that, as we discussed above, it's actually trading at a discount to those Bitcoin that it actually owns, which is why value-oriented investors may find this particularly enticing. Okay, so what? For those that stuck around this far, thank you. Next, let's get into why I think GBTC is a great option for value investors and for people interested in taking a long-term Bitcoin position. Unlike futures Bitcoin products, as we discussed above, which have to roll futures contracts each month and incur fees, GBTC is just a trust that buys Bitcoin and never sells. We also know that based on the math, GBTC is at the time of this video somewhere around a 15% discount to the actual value of the Bitcoin held by the trust. Given that GBTC is also a licensed trust that trades on the exchange in the US, and the fact that we have news that they're actually looking to apply to convert into a true ETF, when GBTC converts into actually an ETF, you're going to capture that premium. So in this example, to simplify, if GBTC today is trading at a 15% discount to its net asset value, we know GBTC has filed an application to actually convert into a traditional ETF. When it does that, that will mean, as I described previously, that shares, when they're purchased, are created, and when they're sold or destroyed, then that discount should quickly adjust to an actual market price. So the moment you hear a news story that GBTC is actually going to convert officially into an ETF, investors should be able to capture that alpha, that additional return. This is why long-term value-oriented investors really like the GBTC product. Okay, so you may wonder then, this sounds all great and good. When is that gonna happen? Well, the answer to that is, of course, no one actually knows when it's gonna happen. If I were to give an educated guess based on the fact that BITO, the futures-based ETF, has just recently launched, based on the fact that the demand for BITO has been extreme, and we've seen assets under management for that product quickly reach $1 billion, I would suspect that market participants will be pressuring regulators to bring this product to market. The reason is there's clear demand. And so if I were forced to have to guess, I would say somewhere between 6 months and 18 months, we're likely to see an ETF conversion of GBTC. Okay, that's all well and good. So what are the risks here? Well, the risk is inherent to actually Bitcoin as a product. So it could crash, it's highly volatile. So of course you wanna make sure that you don't YOLO in and put all the cash you have available into a product like this, whether it's BITO or GBTC. But the other risk with this specific product is that, let's say more investors pile in and you lose that discount. I still don't consider that a negative. However, it would just mean that your potential upside, if GBTC or when GBTC actually converts into an ETF, you just won't have as big of a move in price appreciation. So from that standpoint, I don't see it as a real risk in the sense that if cryptocurrencies and Bitcoin tanks in general, it's gonna go down no matter what. But with this specific product, if you're comparing it to BITO as a futures product versus GBTC, if you're a value-oriented investor and you wanna hold something for the long term, I think that the opportunity set here is that you can purchase it now at a 15% discount to the actual Bitcoin it holds, and you have a calendar catalyst, which means within 6 to 18 months is my rough guess that we would have some sort of an approval of GBTC as a traditional ETF. And when that happens, that discount that we're discussing here, it should close and that share price should actually rise. In case you've not seen my prior videos on Bitcoin, make sure to check out that playlist here. I also put some notes in the show notes about specifically GBTC, some of its history, and just some general background in case folks are curious to read about that. Join me on the path to decoding technology and innovation to grow your wealth on your journey to financial independence. Don't forget to like, share, subscribe, and hit that notification bell. Until next time.